of the year, pretty much. It is the last day of June, last day of the financial year here in Australia. That's the case everywhere. But it is indeed the last day of the financial year here in Australia. Actually, I should have checked on that, where that is and where it isn't, because it does make a difference. Of course, being the last day of the month will make a difference as well, as we probably look to see our institutional people closing positions, not really opening new ones yet till tomorrow, one would not suspect. So that's worthy of our thoughts as we go into today's trading. Righto, let's start out as usual with the pound versus the US dollar and see if there's something that we want to trade today in terms of a breakout. I'll just re-rack to Monday, where we had an entry long and an exit short. That one didn't work. Wow, 3 little Indians there too. Look at that. And usual happens. After 3 little Indians, bang, straight through the bottom of the range. And away you went. If you were trading this, of course, on Tuesday, you would have had an entry there and a stop loss there. And of course, that worked beautifully. And there's a lesson in that, to be honest. If you're not trading this, regularly every day, the chances are your certainly win-loss ratio won't be great, and your loss will probably expand as it goes on, as is what happened here. Look, because we're only doing this Mondays and Thursdays, I think I might change, not necessarily the rules, but I might trade the day breakout. And what I will do, if that's the case, is I won't take the breakout candle. I'll wait until that closes and make a decision on, and that'll be on probably a 5-minute chart, maybe a 15-minute chart. We'll wait for that breakout to occur of the daily range, and then we'll trade what happens after the breakout. It may not break out, of course, but if we're still in the show, I'll show you what I mean on Monday with that one. But last Mondays would have been a failure. 3 little Indians, bang, happy days. And of course, Tuesdays would have worked. So nothing today. The range of yesterday is 109 pips. If you were to enter there, you're trading straight into the weekly pivot. If you were to enter at the bottom, there's probably a fair bit of room at the bottom. Let's have a look at that on a bigger time frame. Yeah, there is room. So you'd be looking at, you're getting your 1-to-1 before those lows. So I wouldn't mind going short as far as the breakout's concerned, but I wouldn't really want to go long. So that'll be a no from me. And again, I'll work on this hopefully over the weekend. I won't promise anything because weekends tend to be my time, and see how we go come Monday. Righto, updates for those of you who have been in trades with me. Kiwi Yen. Oh, I'm sick of this, seriously. We got into this on, yesterday morning, was it? Having placed the order on Tuesdays, as I recall. I can't really remember. It would have been on a daily chart. Yeah, okay, that makes sense. So we would have traded that bar. Ooh, red bar, hate them. But I did, and it's just gone nowhere, absolutely nowhere. So I'm inclined actually to close this. I'll just see what this first candle of London does. If it goes our way, happy days. If it doesn't, even if it goes into drawdown, I'm going to close it because I'm sick of it. It's just going sideways, doing nothing. And that's okay if we can trade it on a small time frame, but this is a daily chart, and I don't trust it too much. The other one, Nasdaq. We're back in the Nasdaq as we semaphore on Monday. We're looking to get into this trade, and of course it bobbed up on Tuesday with this bar, and that's what we traded. And so far so good. I have moved. I'm trading stock at the moment just above the weekly pivot. I may look to change that depending on what happens today and overnight, really. I just want to give this a little bit of space in case it does come back. But if it doesn't, happy days. Good on you, Sweet. Excellent. Yep, that was a nice little candle for me, given the bearish engulfing bar, lower high off the daily pivot ring candle. That's what I want to see. That's what I want to see. That's absolutely in the mayor's office, not like that thing there. And you can see what's happening. Nothing. Absolutely nothing. Anyway, as I said, let's see what the opening candle does before I make a decision on whether I'm going to close that or let it go. G'day, Lewis. How you doing, bud? So they're the only two trades that I'm currently in. They're the only two trades I've taken, I think, this week, apart from that pound breakout trade, which of course didn't work. I think that's all I've taken this week. Someone will correct me if I'm wrong, but I think that's where I'm up to. As far as today's concerned, I want to go and have a look back at the weekly game changer bars and what the week looked like at the beginning of it, if I can put it that way. There were three game changer bars. One was EuroCAD suggesting downside, and someone will probably remind me why we didn't take that. It's going okay. I think I probably said it was the best of them. If you wanted to take it, that was it. And that has so far produced probably at a 1-to-1 mark at the moment, a little bit better than that. Too late now, of course, to get into it, but I don't know what I was waiting for. I have to have a look at the recording to see why I didn't trade that, but I didn't. Yeah, too late now. In fact, I'd probably be looking to trade it in the opposite direction. The other one was actually, there was an Aussie one, wasn't there? As I recall. Oh no, Kiwi CAD. Kiwi CAD looking once again for downside, given the game changer bar there. Was preceded, of course, by a game changer bar, which makes it terribly difficult, and the reward to risk to that low was too poor for me to take. You wouldn't be at 1-to-1 yet, but you're through the lows there, so happy days. That could be a good one. Pound CAD was the game changer plus bar, wouldn't have triggered. Game changer, that one, plus bar, that one, inside bar for those of you who don't know what I'm talking about. Yes, Lewis, I'm in the Nasdaq again. Happy days. In fact, I tried again yesterday and I'll go through that in a tick, tried again to get back into it, and well, not get back into it, but add to the position, and I'll show you that in a tick. So this one hasn't triggered yet. And most often when I see something like that, a big bullish engulfing bar, I'm looking for a higher low. I'm not sure that's going to produce a higher low at this point. I guess it will if this candle closes as it is, but that would have to be taken on trust at this point in time, and that's kind of not what I'm looking for at all. So that was pretty much the three actually that were on the radar. There were two on my watch list. One was Euro Aussie, the other Euro Kiwi, and looking for downside on both. In fact, everything that's got a euro in front of it, I'm looking for downside on. Hasn't happened as yet, which is a good thing, but I see it's just making little highs in agony, and that's what I'm looking for. That was the weekly chart. Daily hasn't really given me what I want to see, except yesterday it produced this, which of course is a game changer bar. Again, I haven't taken it. And the reason I haven't taken it is I'm not sure at this level that I want to get into the market. It's bang on the support level as far as I'm concerned. And that's something that I don't want to do. And if you take that range into consideration, we're right at the bottom of it. So I'd much rather see it bounce off the bottom here, give me the lower high, then I can look to trade it short. Some would argue that there's a lower high there in place already. Okay, yep, I will do this for sure. Some would say that there's a lower high there already, but this range has got me concerned. So I'd much rather wait for the other to occur. The other was Euro Kiwi. This was also a short, looking to play it short. And now I see something that I do like. 1 little, 2 little, 3 little Indians, and a game changer bar. Why aren't I trading this one? Well, I've got to say that I don't know. I should be. I actually should be. And I could still put my entry underneath here, stop loss above there. That still makes sense. Let me contemplate that for a bit, and I'll go and have a look at Lewis's WTI. But yeah, Lewis, I did say earlier, this one here, that was the trade. And we're now trailing the stops, of course, looking for more downside, and hopefully that comes. That's the Nasdaq. WTI, I haven't had a look at that for a few days. Where is it? Sorry, I've got it. Oh, there it is. I've only got XTI, I haven't got WTI. Okay, daily charts. Okay, one of those stupid things. Why do I say that? Because I hate red bars to trade short. And that's what it kind of looks like from here. It's also, this looks similar to the gold chart, the weekly gold chart. Looks like a big false break at this point. And in fact, I think you're at a good inflection point. But there's two ways to look at this from my point of view. There's a false break to the downside, but there's a potential false break to the upside on a monthly pivot double cross. Kind of like them. So I would prefer to be long here, I believe, than short here. I don't like the short. Actually, where's the short? It's probably already played out. This is a false break. So if I can explain that, there's a break of a trade line. We've come back below it. We've retested it. Or is this the retest? That's the question, I suppose. Didn't quite hit that mark, but that would have necessitated an entry underneath that bar, stop loss above, so you would have got some money out of it. But if you treat this as the false break, then you've got to enter here somewhere and put your stop loss here. I don't like the reward to risk involved with that. And if you look at that trend line, we're actually bouncing between support and resistance at the moment. I actually like the long here, Lewis. I like the long there. If I'm wrong, that's fine. These bears will just keep going. But I don't see them going too far, to be honest. I think this is in a bit of a range, and that's the breakout area. So that's the way I'm looking at that one, mate. Inconclusive, but if I was, if you put a gun against my head and said, how do you want to trade this? Then I'd say I'd want to trade it long there. Stop loss wherever this one finishes, I suppose, or maybe under the weekly pivot. Next month's pivot line on gold, or is gold? Our charts, okay, cool. Next month pivot line gold, as in gold, this gold, XAUUSD, or is gold, black gold? Hi, Gary. On gold, okay. Next month's pivot line. I can bring that up, can't I? Navigator, market scanner. Actually, I've already got one, haven't I? I don't need it. Silly me. Gold won't come up there. Duh. Okay. No. Get it right. Get rid of that. Put that on there. All these tools at my disposal. It's just crazy, isn't it? All right. There we go. I've done it again. I can't bring it up on the market scanner. So how do I know where it's going to be? We guess next month's monthly pivot. It's been all over the place. I'd say it's not going to move even the slightest, Gary, I would imagine. Or have you got an insight knowledge as to where that's going to? I'd say it's not going to move a bit. Gold.
I mean, it depends where it closes, doesn't it, mate? I mean, if it closes here, I mean, I've just done the calculation. It looks like it's going to be around about $20 higher.
Oh, okay, cool.
Monthly pivot, that is, yeah.
Yep. How you going?
I'm going all right. Do you know what, mate? I've had a great morning already.
Have you? Awesome.
There's been, you know, maybe sort of like one slight negative, but I don't really mind it. But I've had a great morning because we entered a trade on Monday, and it's managed to kind of like get in profit, close out, and now the picture might look a bit different. I'm going to just give you a little bit of a different view on the Nasdaq and you know, other markets, and see what you think, mate. It's not, Nasdaq's not quite as good, but when you're done here, I'll show you what I'm looking at.
Mate, I'm pretty much done. Gary, I don't want to ignore you at all. I'd love to hear what we need to be looking at, really. The trade manager can see the forward pivot. Yeah, but not on gold. I don't think gold's, well, certainly not on my end, and the other trade manager. Okay, I'll have a look at that in a bit. But yeah, you go at, and I'll see if I can decide what.
Cool, and we'll have a look at the gold, you know, the price on what could be potentially with gold as well in a moment. Okay, so firstly, let's talk about the FTSE. In fact, I'll talk to you through my you know, what happened. So this was the pattern we were looking at on Monday, the inverted head and shoulders, and I sold the FTSE somewhere up here, and I was saying, you know, I think it's going to come down and test the right shoulder, and it has done. And the reason I ended up taking it on the high end rather than the pivot was that we had a beautiful head and shoulders here formed over the last few days. So it is there, little false break there, but you can see that there's a touch there. There's the head back in there. There's a touch there. There's a touch there. So I was quite happy with that. And then measured move on that. Brings us down to the break, this area here. Now that area coincided with this high, so I thought, oh, you know what, maybe that's the place to take profit. So I did start taking profit of those lines. Now, because I take profit manually, in fact, it wasn't my intention. I moved my positions there, but as the price came down and just started to move away, then I started to take my profit manually, and unfortunately, all my trades were stacked. Obviously, sort of like in the terminal window, and it meant that gold was in that particular level. So one of my gold positions was closed manually. I managed to kind of just hold on to this one, but the upper one's now been closed. Now I don't mind so much because what I'll probably try and do now is just wait for a better signal sort of through this area here. I'll add the second position in again, and it does mean that there would have been a $20 kind of loss on the position, but the FTSE actually accounted for quite a lot of profit from the positions I was in with that, because I've closed everything with the FTSE. I mean, even the upper one that I don't know if you remember, but I was in one up here. So I've closed it all down now, taken it all off, and that gold position's covered, so it's no big deal. So
wait, sorry, just if I can interrupt for 2 seconds. Speaking about taking it all off, I spoke about Kiwi Yen that we're in at the moment and how I'm sick to death of it. I've just moved my stops to entry, guys, if you want to follow what I'm doing. Stops are now at entry. Don't give it a toss if it goes back through there. I'm just sick of the trade. Yeah,
do you know, I think it's not a bad idea because I was kind of, I was getting there, you know, a little bit. I was kind of getting to that position with gold. I'm just getting a bit sick of it. I'm getting a bit sick of the fact that it's not really doing anything. So one position closed down, no big deal. What would be to my benefit now, really, is for gold to collapse a bit and then give me a signal lower than this area. So then, you know, there is no loss on the position ultimately, because I can stack in it just a little bit lower. But if it starts taking off from here, fine, I'll add later. Still believe in it. Anyway, so the FTSE is now on that inverted head and shoulders. Now the question really is, it could even come down a little bit further. We might even see the weekly pivot, which is another looks like around about another 1/3% lower for the actual move. So we could see this down here and then start to turn around. Where that brings me into the Nasdaq is that the Nasdaq, when you look at this on a daily, was starting to look like this could be the left shoulder here. This is the head. And then we need to sort of like get up to a neckline to start bringing down a a right shoulder. This could still be kind of part of the head, really, this whole thing here. But is this, yesterday's bar, there was a little hold on. Does it cause a higher low from here? Not looking like it right now. And in honesty, the market looks pretty negative. Everything's getting aggressively sold off at this particular stage this morning. So doesn't look like it is going to hold, but things could turn around. You just don't know. But maybe we should talk about.
I think that low that's just been taken out was pretty much the turning point for the next move, as far as I'm concerned. If that was going to hold, then we could have seen a reversal on. But I think that's gone now.
I think you're right. Well, this is the key bar now, isn't it? I mean, this 4-hour bar, if that 4 hours holds down, because this hourly, has it taken out significantly? Actually, this one has. That one has. Yeah, I agree with you. I think the Nasdaq looks in a bit of trouble. I mean, they all look in trouble. And if we consider why, what's going on, the other reason that I was quite happy to close positions is that we are basically 2 days from the end of the month. And because the month's been good, I like to close positions, end up flat going into the next month. So my kind of profit line is done. I know what I've got. Yes, it could have been. Yeah, I mean, you can always make more money, but then you could always lose it. So I just kind of like to say that's it now for me. Think things can sort of can change now. Just like everybody has to do, I have to fight the fear of missing out. There could be a huge move down that I'm not now involved in, but I have to fight that and say, but it doesn't really matter because the market's there the next, in the next day, the next year, whatever. So there will be other opportunities for me to make money, and it's not really about getting every single move and every single dime that I can from it, because when that mindset comes in, mistakes are made. So I'm quite happy to sort of clear the levels now and clear my head and see what happens. Don't get me wrong, when it comes down, will I be a bit frustrated? Yes, because I could have stayed in. But by the time I sort of place my next trade on Monday, it will be forgotten. So I can quite happily deal with it. But let's have a look at what's driving and what's going on, because there's been some pretty, difficult numbers really that have actually sort of that have come out. So let's have a look. Yesterday was quite significant because from Spain, look at this, 10% flash CPIs from Spain. They were looking for 8.8%. I mean, that's dangerous. It's a horrible number. It really is. It's a terrible number. And then we kind of flip to sort of other parts of the world. Retail sales from Australia still holding up pretty solid. So that looks okay for the consumer there. Consumer confidence in Japan, you flip to another region, really, really negative. So Japan's looking bad just on this number here. And look at that as well on the retail sales. So Japan looking bad. Australia on the other side looking okay just from that number. Spain CPI is at 10%. So Europe's looking bad. Then I don't like this Credit Suisse number from Switzerland, because ultimately I quite like that. M3 money supply shrinking a little bit from the Eurozone. So that is suggesting that they're on the move to a degree. Final GDP quarter on quarter negative 1.6%. So this is where it started, really. So this is what we've now got. Shrinking GDP. This is the first time in the year that we've got this kind of negative GDP quarter on quarter number from the United States. Lagarde was out. Governor Bailey was out, Powell was out all yesterday, still going after inflation, even after these numbers. And then today, it doesn't get really any better. Manufacturing numbers from China just about staying above the 50. But really, this is not too bad. Import prices are kind of coming down from Europe. Not too bad. That would suggest that maybe there's sort of a bit of an inflationary respite to a degree. Final GDP from the United Kingdom, actually not as bad as the United States. Then we go back to kind of the regions. Retail sales nowhere near as bad from Switzerland. And then the economic barometer nowhere near as bad from Switzerland. So Switzerland still looks pretty good, but it did kind of, it really has started to spill from yesterday, and yesterday's speeches didn't really kind of help. Let's wait for the double bottom to go long. Yeah, I quite like that, Sweet. What for the Nasdaq? I think that's wise, and this is one of the benefits of making the money before the end of the month, is that you can now sit back before you're needing to get in position. So I'm quite appreciative that that I'm kind of out now, just so I can now start to think a bit clearer again. Core PCE numbers again from the United States later. Now this is going to be watched, obviously. Unemployment claims, this is going to be watched. So there are some numbers really that are stacking up against the market and causing this downward move. The thing that is going to drive the Nasdaq higher is some kind of reversal in the Fed's policy. And when I say a reversal in the policy, I don't mean that all of a sudden they're going to start lowering interest rates. I mean that they're not going to increase interest rates to start with at 0.75. That's going to be the first indicate. That's going to be the first thing that people will look for. We had a 0.75 raise last time out, and people are expecting that again. I think what the market is hoping for is actually unemployment claims to start picking up. Some of these numbers to actually start suggesting that the demand side is being affected. And if the demand side is being affected, then possibly some of these measures by the Fed are taking effect and inflation can shrink a little bit. Yes, harm the economy, but just come down a little bit, which means they could possibly step back because they've still got this tightrope to walk, which they're going to fall by all accounts. It doesn't look like they're going to be able to stand balance. They're going to stay balancing on that tightrope, but they are still balancing on the tightrope of choking inflation while not damaging the economy so significantly that it takes years to come back from. So they do need to see some of these numbers. So we'll see what happens, mate, with these employment numbers today, and obviously some Chicago PMIs as well. But it's really the employment picture. Then we get some ISM manufacturing tomorrow, but it's the employment picture which is, I think, probably the key, just to see whether we are sort of able to curb some of the demand and drive some of these prices lower. But everything still looks pretty much where it was. There's little suggestion that we should be going long on any stocks right now. So even with a picture on the FTSE possibly making that inverted head and shoulders, would you go long there? No, you wouldn't really, because the technicals could line up, but there's nothing in the fundamentals which say now's the time to go. So no. So it's probably still time to wait. We'll just quickly finally check the dollar index as well.
Yeah, you're still in a bear market, so you've got to bear that. Sorry, play on words. You've really got to keep that front of mind, I think.
Yes, you do, mate. Yeah, absolutely.
The one thing. Sorry, you go.
So I was just going to bring you the dollar index as well.
Okay. Well, why you bring that up? The one thing that surprises me about Forex Factory and probably everything else, and it takes me back to World War II or after World War II, kind of living in your part of the world where everyone was, don't mention the war. Don't mention the war, right? And that's been the mantra forever. We haven't mentioned the war. And, there's NATO meetings going on at the moment, right?
Yeah.
And I didn't know this until I looked it up. And I thought, I don't see NATO mentioned here. So I'm going to look up what NATO actually means. I mean, we all know it, the acronym stands for the North Atlantic Treaty Organization. But what does that actually mean? Do you know why the NATO was formed?
Was it formed after the Second World War?
Yes, it was formed by, I think, 7 members at the time. But it was formed, or the alliance was formed, is now 30 strong, to, protect, really, the democratic freedom and the threat posed by Russia.
Mm.
How poignant. I mean, how on point is that right now that that was the whole reason they were formed in the first place.
Right.
So you've got to expect that they're going to be well, naturally they're going to be talking about the war and how that they deal with this. But specifically, all of those 30-member countries or 30-member members, if I can say that, were formed for this exact purpose. How
Right.
are we going to defend the world, if you like, against Russia? Wow. And I go,
That is
oh my
interesting.
God.
Yeah.
And no one's talking about it.
That is interesting, mate. Yeah, I mean, it shows us a significant amount of foresight, doesn't it? I mean, you know, looking at Russia, you look at the Russian economy, and they obviously are going to get harmed by some of these sanctions. But I think because of the way the United States have really edged themselves into a corner with the money printing they've done over the last decade, the current account comparison between the United States and Russia is not in favor of the United States. You know, the Russian economy in that particular regard is a lot healthier, because they manage to export more than they import. You know, with business investment as well. So their current account is a lot stronger. The American current account is in all sorts of trouble, and it does depend on which metric you follow, depending on which you assume to be the strongest area. But the United States is in a lot of trouble, you know, and as you say, people aren't mentioning the war, and there's lots of things that people aren't really mentioning. And you know, you could, if you start talking about some of the ugly numbers from the United States, it's very concerning. That the West
need any
really
convincing, mate, I can tell you.
Yeah, I mean, you know, the West is almost, because really the West is backed by the United States. So if the United States has kind of really printed themselves into such a tenuous position and such a tenuous situation, then the West is surviving on really just pure faith. And when you look at the numbers and the data, that faith looks to be, you know, probably misguided. Yeah, ill-founded. Yeah, exactly. So I don't really know. You know, it's difficult to know what happens from here, and it's very difficult because obviously whichever country you're in will provide you a news feed which manages to kind of speak to the nation. You know, there's still sort of incredible propaganda going on. You know, if you read the news over here, Putin's on his knees. You know, he's close to defeat every single day. And I'm sure if you were to read it in other regions, you know, obviously Russia, but other regions as well, the absolute reverse would be there. So it's very difficult to kind of get the correct information as well. But you can certainly look at the
everybody
data.
seems to be saying that, you know, there are war crimes being committed every single day. And if you watch the news feeds and you see a missile explode in a supermarket chain or whatever, schools and God knows what, you know, you've just got to be so angry at that. Imagine if you lived in Ukraine, for God's sake. This can't end well. This really can't end well at all.
No, and it really does depend. I think that there was probably some kind of assumption that maybe it'd be done by now. I don't know, but it's very difficult, isn't it, to kind of make a case for buying stocks when we have this kind of situation going on. You know, especially with the inflation picture, it does surprise me about gold. You know, I'm surprised day by day the fact that gold is going nowhere. But of course, that's a lot to do with the price of the dollar, because actually, if you look at gold, yes, it's in trouble. You know, you sort of like, you look at it on the weekly chart, and it's in a bit of trouble here. But when you start to kind of look at it against the pound, looks good. You look at it against the Swissy, doesn't look so good. I mean, obviously the Swissy is kind of relatively strong right now. You look at it against the Aussie, looks good. So it really does depend on you know, which currency you look at it against. I mean, you can really see which currencies are doing well and which currencies aren't doing that. This is gold against the euro. Looks okay. You know, it doesn't look too bad against the euro. So it looks okay against the euro. Looks all right against the Aussie. Looks all right against the pound. Terrible against the Swissy. Pretty bad against the dollar as well. But at some point, I don't know when it's going to be, but at some point, this dollar is going to fall, and don't know how hard it's going to fall, but it's going to fall. I mean, it's, you know, we're looking at data here from, I mean, I suppose it's possible that we could climb right the way up to these highs up here, which is right the way up to 120. So we could be looking at another 15 to 20% move on the dollar.
I'm surprised it's gone through those levels now, but
yeah,
who am I?
Well, exactly, mate. And this is the thing. You don't know what the catalyst is going to be, do you? Because I thought we had it the other day. That's proved to be inaccurate. Now we're looking at a dollar which is looking pretty healthy. So you'd still expect some kind of retracement, to allow people to get in from this particular burst out here. We haven't had a decent move to the downside to allow the bulls to kind of get on board, and they are really relying on what now to do. On what's the next story before they are probably able to justify a really good move in the dollar. But yeah, so it's not coming down anyway. So we'll continue to monitor the situation. I'm sticking in there with gold, but it is kind of frustrating. I can't deny that. It's a very frustrating market to be involved in, and I wish I'd listened to you when you told me there's a double top. And that's all I see. It's a load of rubbish. Don't get involved in it.
I can't help it when I see something like that. I've just got to point it out. But it hasn't come to anything yet. It just hasn't.
No, exactly. Do you know what, mate? I feel a bit stuck because my overriding kind of view is that gold is going to rally, but the technicals aren't really shaping up, and I'm stuck because I'm thinking, do I close this position off? And it's not too, it would be an expensive loss if it was just the gold trade on its own. But actually, when I sort of think of the month can absorb that. It's not a big problem really to close the position off. Do I close the position off and just take it? No big deal. Or do I stick with my view, which is that gold is going to go? And that's my, and trading is all about expressing your view. So I'm expressing my view, and maybe I should stick in there. So I'm in two minds still, really. About what to do. The only thing is that when I closed the position earlier by accident, it has reduced the position sufficiently to give myself some time to kind of
I just go back to the common sense approach, which has me completely confounded, because conventional wisdom would have gold, as I said on Monday, at 3,000, 5,000 by now.
Yeah,
given the circumstances that we're under. And when that hasn't happened, I go, well, hang on, why hasn't that happened? I can't find the answer to that. But
it's the dollar, isn't it?
Yeah, but it hasn't always been the dollar, I don't think. The dollar hasn't been, although I suppose if you look at the charts, you'd get the answers to that. And I haven't done that full comparison. But at this point, I still don't know, and because I'm now starting to get interested in the stock market for obvious reasons, because it's going down so far. I want to be there when the buying comes back. I've started to do a little bit of research, and now out of Kiwi Yen, by the way, it's just closed at break even, and I'm not disappointed. One of Warren Buffett's quotes that I saw the other day, I can't remember it word for word, but it's, isn't that gold a wonderful thing? It's so lovely, it's shiny, and it's worth, the whole world supply of gold is $180 billion or whatever it is. Yet I can buy the whole of the state of whatever, and that state, I can buy half of America or 2/3 of America, the arable land in 2/3 of America, for exactly the same amount of money. Yet I'm going to get a return on every one of those dollars that I spend out of the land, right? Yet gold looks pretty, it sits there, but it's not going to pay me one little thing. Not going to pay me 1 cent. So, that's kind of where I'm at with gold, I think.
Yeah, do you know, I think you're absolutely right. And I suppose I wouldn't really sort of be getting involved in it if we weren't in this particular situation and scenario. Because I totally agree with that. I think if you're looking for something to give you a return, then why would you buy something which effectively, as you say, is just something that is just dormant and just sits there. But Warren Buffett's been really interesting, and all the stuff that he said about Bitcoin has also so far started to come true as well. He's never liked anything like that because, again, he sort of says he doesn't really understand it. And again, it's Warren Buffett is really quite pure, isn't he? And he's going to be loving this particular scenario right now because all of a sudden he can kind of go back to fundamentals of a company because the price has got so elevated that that it wasn't about fundamentals anymore. And that's really where we are now. We should be really looking around and saying, right, what stocks have got really, really good fundamentals? You can actually start looking at the balance sheet properly. What kind of products do they make? What products do they have on their balance sheet? What are they actually selling to the world? And if it's not just intellectual property, then we're talking about companies that actually provide something, which is really why I liked BP and I like Shell. I like the oil companies because I think that the oil companies that obviously have that particular commodity and are making the transition towards green energy sufficiently should really survive. They've got the clout to be able to invest in green energy, and people will always need energy. People always need food. So I guess this is where you start going right back to the start and saying, rather than buying supermarkets that sell food and ultimately probably you could say could come and go, the likes of Tesco and Sainsbury, you go right back and say, well, who are the food producers? Because those guys aren't going to come and go. The only thing that's going to happen to those guys is that they may get taken over. They might have some sort of takeover, but that'd be it really. Because if they've already found the correct environment to mine whatever it is they're mining or grow whatever it is they're growing, that should remain in most instances. So you could literally go right back to the start and just say, look, let's focus on producers for a while, rather than focusing on the people in the latter part of the supply chain, because there's 4 really stages. If you think about the producers at the start, and then the wholesalers, the wholesalers would be just before the producers, the ones that kind of then package that stuff up. I don't know what you call those guys. Then the wholesalers that then would feed it into the retailers. So it's where you sort of like go in the supply chain, I think is the first part of the question. And when you find that, then you can start comparing, the stocks, and you can focus now on the fundamentals, really finding some value. Because there's
how there's always a flip side of the coin, right? And certainly in markets, that's always the case. You can always find an argument the other side, and if you can't, then you should be very suspicious about that particular asset, right? In my opinion, anyway. I think this is an excellent exercise over the next, 3 or 4 months, that we do a Monday, I don't know what to call it yet, a Monday watch list, where we think about things like what you just said. What is likely to benefit from a recession, for instance, or what's the best asset to trade in high inflation, or things like that.
Well, mate. Yeah, I think that's really cool. And I'll tell you one thing that comes straight to mind are banks, because really banks make their money when interest rates are high. But the problem that the banks have got right now is that they borrow at the they borrow from savers at the current price, and they make their money on the future price. So if you've got bond yields that have got that are flattening, the bank's profits are also flattening. So this is where we sort of like start to get into a really interesting discussion, because you're absolutely right. I mean, that's the first sector that I'd be drawn towards. High inflation, raising interest rate, banks, go there. Why aren't banks doing very well? And then you start to look into it and think, well, actually, that's why banks aren't doing well. If they can't lend out at a sufficient higher rate, because the 30-year yield is flattening in comparison to the 2-year yield, then they're actually sort of like their margins are being squeezed. So that's, I mean, until that particular situation changes, then you can't do anything with that. But what that enables us to do is say, if that does change, then we go into the banks, and they become quite a simple sort of, you know, really a simple sector to then start looking at. HSBC and you know, different ones in different countries. But I do sort of like think that's a really interesting discussion to kind of have, because you can't, you have to start there and then say, as you say, what's the other side of the argument? Banks, great, inflation and interest rates. What's the other side of the arguments that banks don't do it? And then you go, well, actually, they're not going to make that much money if the you know, the long end is not paying very well, because they can't charge as much, which means their margins are gone. So then you go, okay, well, that's no good. Well, who else can you look at then?
Well, traditionally they've found ways, and they call them fees. And they just pluck them out of the air when they need to, right?
Yeah.
Like a card exchange fee, or they're just fees on fees on fees. So they'll probably survive, but your thesis is pretty much spot on, as is where I'm kind of going. And you're in that space too, or you like that space, this space, which is green energy, right?
Yeah.
And green technology. And I'm going to start the ball rolling. I'm going to give you two that I think are worth watching.
Okay.
And one of them is, indeed, Gary, who benefits out of war. One of them is Lilium, Lilium. Now, I'm not saying buy them by any stretch. I'm saying do a little bit of research along them or around them, and make your own decisions based on that. I have not bought any at this point.
Which index do they?
LLM, I think it is the ticker.
Do they? Is it the Aussie 200?
Oh, sorry. No, they'll be on the US.
Oh, US. Okay. Well, okay.
Hang on, I'll just bring it up. It's not LLM. It's on Nasdaq.
On the Nasdaq.
LILM.
Okay, cool. All right. Yeah, got it.
Okay, right down the bottom of the range at the moment, or very, very close.
Interesting, mate. Yeah, they've had a little bit of a boost in the last. Oh no, that's today. Yeah, today they're having a bit of a boost, aren't they?
And the other one is, I'll get the ticker for you. Ooh, okay, doesn't like that.
No dividends on Lilium.
Also on GRNA, also on Nasdaq.
What was that second one?
GRNA. Now they've been tanking with Nasdaq, obviously, right?
Yeah.
But the interesting part, Lilium's holding its own. It's doing okay, despite the fact that the Nasdaq's tanking, or has been tanking. So, like I say, they're not something you just buy because I think they're interesting. You do a bit of research into them, and I think they're quite interesting companies.
Yeah, cool, mate. Okay, we'll have a look at those. I think Gary's point on I can't see his post because I think it's going directly to you. But
yeah, who benefits out of war? Yes,
who benefits? I think that's a really good question. And you'd have to say right now, I mean, it's obvious the food producers will do well. So anything that Ukraine and Russia provide to the market, which is being choked, that particular commodity will start going up in value. And if that commodity goes up in value, then we'll see those companies doing well. So that's the first thing. Weapons producers, obviously, you'd have to say would do quite well. And we'd have to look down at those because actually the whole market has been doing pretty badly. But BAE Systems is something, and Rolls-Royce maybe, yeah, BAE Systems. really ever since March have been on a bit of a tear. Actually, since 2020, they've been on a tear, obviously, because everything was. But yeah, so since the war started, BAE Systems are currently up 30% plus, and they do make some, you know, they are sort of part of supplying weaponry and stuff like that. So I think that is, yes, the global defense company, dominant position in the UK. Yeah, so it's a top 6 supplier of the US Department of Defense. The problem with this, Gary, and you're absolutely right, we should have really asked that question 4 months ago. And if we had asked it 4 months ago, then we could have maybe taken advantage of some of that. But you're absolutely right. I think what we should be trying to do now is front run what's going on. I mean, it could be that BAE Systems continues to do well, you know, if things don't calm down. But the problem is, and this is the same problem I see with the dollar, if something changes, and it literally could change overnight, or it could change while you're sleeping, these things are going to tank before you have a chance to kind of get out of positions, because they've gone so far. And if BAE Systems is up, you know, 35% in that region, then you could wipe 10% off that if something, like, let's say there's some kind of resolution, or they decide to sit around the table, or anything like that. Then the ones that have been going particularly well will all of a sudden probably reverse quite quickly. But we're definitely sort of like talking about the right sort of stuff there.
Absolutely. And, you know, you've just outlined pretty much where I'm focused at the moment. Is with trading, I'm reactive, right? So if the market does this, I do that. But with investing, I think you've got to be ahead of the game. You've got to be proactive and do your research, right? And come up with these questions. What happens when we do go into recession, as we're likely to do? What's likely to be the outcome of that? What companies are going to benefit by that? It was something I see at the moment, which is why I've mentioned those two particular companies, is going back to your point about who's producing goods, who's producing food, who's producing this. You know who's going to be a major producer of food because of COVID, because of wars, and because of recessions, etc. All of those things combined. You know who's going to be one of the major producers of food?
Africa.
You and me.
Are we? I'm rubbish at gardening.
But people around the world, I've seen this, companies who are actually more influencers than anything else. They're actually putting out this information on how to grow this vegetable, how to grow that vegetable, blah, blah, when to grow it, how to prepare your soil, all those sorts of things. So there, and I haven't got, you know, a list of companies that I think are fantastic, but two of those are involved in that sort of technology. I believe that is a very interesting sector. Well, then if you can find people who produce the kits, and I don't know.
Yeah, well, do you know what, mate? This is where the discussion gets quite interesting, because you could actually go back and say, well, if you need a specific type of soil, where do you get that soil, and who produces that soil? Because now we are talking about a producer. Now we are talking about somebody at the front end of the supply chain. So, you know, people that provide soil, that could be a factor. You know, you're in a particular industry, which I'm sure there's people that provide really good quality bamboo, and people that provide average bamboo. And
I'm right into that.
You're right into that, yeah. So it's no different, is it? There's no different than when you sort of like go down the list, who provides the higher end of, you know, quality stuff, and who sort of provides the weaker stuff. But yeah, I mean, I'll tell you what we should maybe do. I don't know whether we have time on a Monday with George and Simon, but maybe Thursday's a better day for it.
Maybe it's a Thursday thing. Yeah,
maybe next Thursday. What we will do is we'll start with a list of sectors rather than going stock straight away. We'll start with a list of sectors and look at which sectors could actually benefit from the coming 6 months. And then we can start thinking about which stocks within those sectors are interesting.
Now, this is not Ash and I, guys. I mean, we will do that, but this is also homework for you. This is your show. Don't forget, contribute, give us the ideas as well, and who knows what we'll come up with.
Well, this is it. I mean, to be honest, if people don't want to discuss this sort of thing, then obviously we need to shelve it. But if you guys do want to discuss it, and I think it's, you know, an interesting discussion, even if we don't.
Oh, well, I hadn't considered that.
Yeah. But if you guys don't want to talk about this sort of thing, and you want to stick to MT4 and what we've got in front of us, that's cool too. It's not a problem. We can always find something to talk about because there's lots to talk about. But if we want to sort of broaden out the discussion a bit, then let us know. And you know, we can just have 10 minutes, 15 minutes on what might be something, you know, of interest. And then we can sort of dial in and see if we can find, you know, a decent company.
There, I've just posted something that may be of interest to other people. It's like I don't know if you heard of Jeremy Grantham.
Jeremy who?
Grantham.
Jeremy Grantham, no.
He's of the ilk of Dalio.
Oh, okay.
Those sorts of people. Been around for 100 years. And that is one of his lectures or presentations, if you like, to a group of, it's about climate change pretty much. And I find it fascinating. And his insights are remarkable. So it does go for a while, it goes for 2 hours. But if you just listen to him, which is pretty much not long after the start, you'll be very impressed. I think you will. Could be wrong.
Yeah, would you know that the climate change discussions is another fascinating one, because actually then you could start getting into products like fresh water. You know, if we're going through this situation, who's going to provide the fresh water? And you know, this is really the same discussion really about food. Who's going to provide the world with food? Who's going to provide it with shelter? And who's going to provide it with water? Because they're the three things that you need to survive: food, shelter, water. So you could literally sort of like go back and say, you know, if you start at the base level, I still watch the YouTube. Cool. Yeah, that's great. Yeah, Swee's up for it. And actually, Swee, you didn't get that. No, they seem to. I don't know what happens to Zoom, mate.
Swee's not talking to me.
But it seems to default to people's direct messages rather than group chat. I don't know what's happened to Zoom, because this has been going on for about 6 months. But I'm glad Swee's up for it, because I think, you know, Swee, from what I gather with you know, your lifestyle choice, Swee, you've probably got quite a few insights into this stuff. Malcolm, you need to open it to everybody. Okay, not your fault, mate, because I wouldn't have known that either. But maybe when we start on Monday, we'll see if we can figure that out first, so we can open up the group chat properly.
How do you mean? You have to do that individually, and for whatever, I have no idea why you have to do that. But oftentimes, when we're doing the quiz, I'd have my address to everyone. I'd answer one question, and then I'm talking to somebody individually.
Exactly,
for whatever reason.
But that's what I'm saying. You know, what's happened to Zoom? Not Malcolm, Marlon. So Marlon, you got any ideas, mate, about how we can fix it so it goes to everyone, or is it not your end?
Yeah, by default, yes.
Yeah, just goes to everyone by default. Yeah, because it is a bit frustrating. You sort of having a chat, and then you're telling me what Lewis is saying, and I'm telling you what Sweet's saying. And the guys can't even talk to each other. All right, well, we'll see. We'll see if we can fix that up. Live in Taz in August. Live what? Do it live in Taz. You mean all of us together in Tasmania in August? That'd be cool.
Yay!
Oh, live in Taz. Sorry, no, I think that's what I mean. Not live in Taz. Live in Taz. That's a pretty good idea, isn't it, Jeff?
Well, it's half the reason I'm here, I've got to say.
Yeah.
Because of climate change.
Oh yeah. It's always set to send by host and co-host. What does that mean?
That means by default, when you chat, it's set from if we're a host or a co-host.
Oh, I
It's
see.
set to go there.
Can we
and
change
nowhere
that,
else.
Marlon? Is there anything we can do with that? Yeah. Yeah, can we change it so everybody can talk to everybody? Oh, we're not allowed.
Oh,
What is going on?
I think I did.
Okay.
I saw a survey there at some stage. Did I not?
No problem, sweet. I will check with Lloyd offline. It's all good. You know what? There's absolutely no reason that we can't talk to everybody. I'll speak to James. Oh, James is away. James is away. He's on national service.
Well, our preference was to do that from the beginning. How everyone can see chat.
Yeah. Yeah. Oh, do you know? It's probably to do with some of the other events that it's just changed it by default. We can figure it out. It's not a problem. I will speak to Lloyd then see if Lloyd can figure it for us instead. You know, it won't be a problem. It's just obviously a default setting that we've done for the other shows. But James is away, so if Lloyd can't sort it out, we're stuck with this for a couple of weeks.
Yeah, I think that now I do recall that happening. That had a little survey, and I said no, everyone's got to be involved. I mean, what's the point if not?
Yeah,
crazy.
Yeah, it is that.
We got anything to trade?
No, mate.
You put the Q in the rack.
I'm done this month. I'm all good. You know, I'm quite happy to turn my charts off and not think about them until Monday. It works now. Oh. Hey, how did that happen?
Well, you can select it.
Oh, you can select it. Okay.
Yeah.
All right. We just want it to be default, so it, you know.
That's right. Mm.
Okay. All right.
I need to point out a few things before we go. I think
you do that, mate. You point out some stuff, and then we'll call it a day from there.
What do you actually think about trading on the 30th of June? By the way,
me,
if you were happy to be trading, forget your personal circumstances. What do you think about the 30th of June and trading on the 30th of June?
Oh, I don't really have any I don't really have any bias, mate, to be quite honest. The last week of each month and the first week of each month tend to be my best period. So any sort of last few days I like, usually. I mean, you know, as I say, I mean, I've done really well this month, and I've got to say, I think it's maybe been a slightly tougher month than I thought it, you know, than some of the others. So because of that, I'm done, mate. I'm just sort of going, you know what? Let's just sort of be thankful for what you've got, and just regroup. But if I wasn't there, if I still needed to make some cash for just to kind of improve the margins, then I would be fine with it. And actually, I think I'd like it because it tends to create some volatility the last few days of the month. You know, as things move around, and that's good for me. So I personally, I'd be in if I needed to be.
Yeah, look, it doesn't make that much difference to me, to be fair. I've also had a good month, but I also see some potential here. So this is one of them. And like I said on Monday, if it's got euro in it, I just want to be short.
Yeah,
euro's in front. So here's another opportunity I see. Euro Kiwi, and we spoke about this on Monday too, I think. One little, two little, three, or 2.5 really, because that's got to be a false break before it's three little Indians. And I need to point that out. I can see people now seeing 3 highs in a row and just going short. That's not the criteria. The criteria is it has to be a false breakout. So that's a false breakout of this range. That's a false breakout of this range, albeit very tiny. And this would have to be a false breakout. So in other words, it's got to come underneath here. It's got to come back inside that range. And to trade it, I would then need to see a retest, which would then produce a lower high. And that's when I trade it. And what I would expect out of that is this range to be broken to the downside. And I continue to make a point of this. I don't know what happens after that breakout. I don't know if it continues. I don't know if it reverses. All I can tell you is that history proves to me And I see it time and time and time again, especially in the current market, that once you see that and that, so what I'm pointing out is a false high, and another false high, but it's not proven until it comes back into here. And then to trade it, I need to see a retest. And you can trade it from there, or you can trade it from there. Higher risk, pretty safe. Then you trade it through there to your first level of support and take most of it off there. Because I don't know what happens next. All I can tell you is that structure will break to the short side.
Why didn't you use the low of the 28th of May as your first level of support? Why did it go beyond? Oh, because it's the lower end of the box.
The low of the 28th of May.
The box. So basically the bottom of the box. Why isn't that not the first area of support?
I'm not saying don't take profit there.
Okay.
What I am saying is, if this Three Little Indians works,
yeah,
it breaks the rain.
Oh, I see.
So don't be afraid to trade through it. That's what I'm saying.
I see.
And I see that time and time and time again. And all the euro pairs are showing me pretty much that at the moment. So pick your poison. You don't have to trade them all, of course. Just aggregate your risk on them if they do set up for you. And they haven't set up yet, right? At the moment, it's building a position, or it's building a setup, but the setup's not there yet. That's Euro Kiwi. As I said, just have a look at all the Kiwi pairs, and they're very, very similar. Euro Aussie, not Three Little Indians yet, but a double top and a potential lower high. I said before that I don't want to trade that bar until I get a pullback here. Now I'd be happy. Tomorrow morning, if this looks like this, and I said this from the outset, I'll be trading that short, but I don't have Three Little Indians there. Euro CAD, too tough to trade now. It's gone. Euro Swissy, same. It's gone. Euro Pound, that's still on my watch list. Euro Kiwi, we've just mentioned. This is interesting, Euro Dollar. Really, really interesting. I love this chart. And we need to get some context around it. This is a potential reversal, really, really potential reversal, looking at it very closely. It's tough to be thinking long the euro for me, I've got to say. But I'm also a very bear dollar-wise. So if you like the dollar to go short, and not many people would, I've got to say. Where's my dollar index? Disappeared. There it is. You are at, the thing I don't like about this is, well, actually, I don't mind it. It is a bearish engulfing bar, depending on your definition of that. It is a potential head. It is a potential right shoulder. So maybe, just maybe, this can form. I don't know. But if that does form, then the euro dollar will form as well. And I think there may well be something to head out of the euro dollar. And I don't believe I'm saying that, because I'm an absolute bear the euro.
Yeah. So
probably leave that one alone. But if it sets up, it sets up. It's as simple as that. But yeah, I think the one I'm most keen on is Euro Kiwi. And just recapping, now out of this one, which was Kiwi Yen. Our entry was about here somewhere. I can't remember exactly. Or here, like days, seems like months ago, because we've been through all this, right? And I'm sick of it, totally sick of it. One thing I would say, it's now looking like a potential false break to the upside. So a retest of there would be interesting. Euro Kiwi, that's the one. That's the one. That's the one I really like. So wait for it to come there, retest that area, and away you go. And that's about it, I think.
Cool, mate. Cool. I'm with you on the euro. I think the euro is. I mean, the eurozone itself is just a mess, and any time or chance to go short, I think is an opportunity. You know, we'll see if if it unfolds that way, but it certainly seemed like an opportunity, even with them moving on interest rates. I don't think it's going to last.
Lewis, I said this last week on Triple X. Is N is down now. Which pair was it? Triple X. What does Triple X mean?
Triple X. Gold? Is it gold?
I don't know. Triple X. Oh, you don't know which pair. But what did I say? Three Little Indians? Yeah, probably. Yeah, probably. Euro pound? No, that hasn't gone down yet, I don't think. I'm going to have a look at last week's sheet. Euro pound, Euro Kiwi pound. Euro Kiwi, Euro pound. Where's Euro pound? Haven't got one. Euro pound. No Three Little Indians there, I don't think. Damn, short. Yeah, wait till you get to my age, Lewis. Yeah, short indeed. No, I can't remember either, mate. But if it was Three Little Indians, it wouldn't surprise me at all if it's gone down. Not at all, because it's a super duper indicator in my book. But again, don't get carried away with it. It breaks the previous range, right? I'll go back to it and just make a point of it. It will break this range in a high percentage, but once it hits a support level, I won't take any responsibility for what happens after that, because that's not the point. The point is it breaks the range, the previous range. That's all. So, you know, you can take good profit once it's done that, in my humble opinion.
Yeah, Gary's
Euro
just
dollar
saying
because
about,
it's euro dollar. Sorry. Yep.
Gary's just saying about that. You know, I put it on the heat map that the euro is the weakest of the currencies, and that's because of the COT, the seasonals, and the fundamentals all suggested that, you know, it would be the euro this week. I don't think it's played out fully yet, has it? I mean, the Kiwi
Not
hasn't
yet,
played
no.
out, and the Aussie. So still, you know, it's still hanging
That's why
on
I'm
in
saying
there.
I'm still interested, even though it's the 30th of June. I'm still interested. And
I
if
see what
they
you're
do
saying.
set
Yeah.
up, happy days.
Yeah. Well, do you know the other thing about it being today as well is that I also put on the Telegram that we might need to wait until Wednesday before Lagarde had spoken before we really know whether it's going to move. So if you were to do that, then you'd have to wait until the 30th and the 30th, you know, and the 1st of course, it's the last day of the month today, isn't it?
It is, mate. Oh, that was it. There you go, Lewis. We found it. It was euro dollar. And you remember, this was it. You just brought my memory back. False break. Now, there's two ranges here, in my humble opinion. One was the triangle. Remember, I pointed this out. And the other was a rectangle. And we had one little, two little, three little Indians. And we're waiting for exactly what I just described on Euro Kiwi to occur. Now, you had to be in front of the charts, but it did happen. Hang on, I'll go a bit wider so you can see it. Happened on Tuesday. You could have traded that bar there. Don't like it too much because it's a big one, but it's got a green body. It's got a rejection of the daily pivot. Bang, away you go. Broke the structure. And I don't know if it's broken the rectangle yet. Let me put the rectangle back in. But that was it. I remember it now. So the rectangle is pretty much there. One test, two tests. So it's now just slid through it. I wouldn't want to be jumping in now, but it does potentially look like a break and retest. But yep, 1, 2, 3, bang. And that's exactly what plays out. Breaks the structure. So it broke both structures. Retested that one. Could have got in. Happy days. Did we all trade it, guys? No, me either. Because you simply got to be in front of the chart at the right time. And if you weren't, this is a 4-hour chart, then you just miss it. But be aware that it really is something that I've found is very, very reliable. So there you go. Euro Kiwi this week is the one. But I'm not staying in front of the charts all night to get set up. I can assure you of that. If I miss it, I miss it. Who cares? FOMO is not part of my vocabulary anymore. Once upon a time it was. I used to wake up in the morning. Oh my God, look at that thing. It's gone. I wasn't in it. Should have made a shitload of money. Don't care. So it's the ones you get when you're in front of the charts that count, really, at the end of the day.
Yeah, this is right, mate. Considering it's the end of the month, I've just looked at the seasonalities for gold, which are pretty solid in July without being outstanding. It looks like we might be waiting till August before the real kind of the real move in gold. So looks like I've got another month of frustration, mate, if I choose to hold on, which I probably will.
My order's probably still there, is it, on gold?
I mean, you know, I'd love you to be involved in there with me, because then we got something to discuss. You know, but by the same token,
I don't need that.
I want you to get in because you want to get in on it rather than us for us having just something to discuss. So if you don't think it's any good,
as I said last week, it's still there, still sitting there. It just won't go away. In fact,
no.
It's this setup here, which is telling me false break, and it's going to go long here.
Yeah.
And I think even on a daily chart, it's still there. Get rid of that one. One little, two little, three little Indians broke the range. There it is again.
Mm.
What am I seeing on the daily chart? Oh yeah. There you go. There's a false break. Long here. First take profit. I actually placed that order, mate.
Yeah.
And closed it. Yeah, and closed it. But God, look at it. Wow. If you were trading it, you'd be ripping your hair out, wouldn't you?
Yeah, exactly, mate. Yeah. Lewis is just saying that this 2 to 3 year, the seasonals may distort due to COVID, and now the war. What do you think? And yeah, you know, that's a really fair point. And I think this is the interesting thing about the seasonal, the seasonal patterns, because there's always something, but we do seem to have had that something in very, very close succession this time around. It's usually, you know, maybe once every I don't know, 5 to 10 years, but this time it seems to be every couple of years. So I think that's a really, really valid point, that the seasonals just may not play out, because if we think about, as an example, why would oil go up? You know, why does oil tend to rally during, I don't know, the summer months? And we know that Saudi Arabia tends to export less during the summer months. So that's a seasonal pattern with a fundamental reason. With this, the fundamentals are all over the place, really. You know, the normal fundamentals, I should say, are all over the place because of what's going on with inflation. This is an extremely different time. So that's fair. That's certainly fair. I'm just trying to grasp onto something, Lewis, just to give me a reason to stay into it.
Yeah, look, there is a shift away from the norm. There's no question about that. No question. And we've had that shift, frankly, we've had that shift since some idiot came up with a thing called Brexit 7 years ago.
Yeah.
And nothing, we've had change after change after change after change since then. And, you know, the latest is a war and a pandemic. Oh, hang on. Better throw in inflation as well. What's next? God
God
knows.
Well, yeah, exactly. crazy money printing really was a part of the war and the pandemic, which has caused all this inflation. Well, one of the causes anyway. The supply issues are obviously a big problem, and this is the thing. I mean, you know, COVID hasn't really gone away, as China has proven. And if one of the reasons that we're getting the supply problems is because of COVID, and you know, people can blame the war, but there's more to it than just the conflict. So COVID is still causing issues in the world, and it doesn't look like it's going anywhere anytime soon. But we will see. Anyway, mate, we better push off, and we will. So next week, let's see if we can do that, guys. Next week, let's get all the sectors. That's all we got to do for next week. Get all the sectors we can think of, and we'll make a big list. Oh yeah, I know you got it, Lewis. Yeah, I know, mate. I know, not great. I got it not that long ago either. And it isn't great. It isn't great. It's a you know. It really does attack some people in a terrible way.
Oh, COVID. Right. Okay.
Yeah. Anyway, let's get our list together. Let's do that for next week.
Hang on, we've got a YouTube comment here from Wing. And Wing is saying, I'm not sure what Wing's point is, but Wing saying dollar yen 132.20 ? Okay. Let's see if we can decipher that. Whose chart are we on, yours or mine?
Yeah, just on next week. If it doesn't matter how many sectors you think of, even if you think of one, I will get a list together and we will bring it up. And I will put it onto a spreadsheet, in fact, let's put it on a spreadsheet and we'll look at it every week. But let's all get just a sector. Every sort of bring a sector or as many sectors as you can. You have a look at dollar end, your end, mate. I'll look at it my end.
Wing, tell me more. 132.20 ?
Oh gosh, Wing, I'd love that. I would love that. 130.
Is that a target you've got for downside? Oh, look what I can see there. 1, 2, 3.
Oh, that'd be lovely. That would. Were you on the day on a daily, right?
I'm on a daily, yeah.
Yeah. 1, 2, 3. 132.24. Yeah, I mean that makes some sense. There's actually levels below that make more sense. I think. No, I think you're right. I think you're right, actually, Wing. Yeah, I mean what I see, just to go along with your thing there, Jeff. You got daily charts, closing prices of which is the low of that that moves to the downside there on the 16th of June. 16th of June, give us a low.
I'd reckon the level's probably there.
Yeah, I think you're right. However, if you change that to a candles.
Oh, yep.
Just so that's a little bit easier to see. And then draw a trend line I've got going from the 4th of May.
4th of May?
Yeah. Change it to a daily if that's if you're on the weekly, change it to a daily.
Oh, sorry, I thought it was on the daily. That's why I can't see the bloody thing. 4th of May, which is around about there. That's the 10th. That's the 4th. Yeah.
Oh, hold on a minute. What you got there then? Sorry. August. Sorry, March. 4th of March.
4th of March, which is going to be just out of my view. Go away. Sod you. Go away. Which is going to be down here. Yep.
Yeah. So that low extrapolated right to the next low. That would take us just a little bit higher, and it looks like it might take us to that closing low on the 16th. No, bit lower. The next one down from there. That one, that closing price there. That looks like it could meet that area.
Yep. Want to hurry up though?
It does want to hurry up. Thing is, though, it could hurry up because it's been so. You could just tank. Yeah. I don't know why is the problem. That's the big. I wouldn't trade it personally. I agree with you. Three Little Indians. I think that target is fair. Problem is, the Japanese economy is still on its knees. There's nothing really suggesting that they're going to do anything with interest rates. They're sticking where they are. The only thing is that they might have to pivot just because they are potentially now going to start getting hurt by the difference between the price of the yen and everything else. So it's possible that it does reverse, but we haven't got that yet. That's the problem I would have, Wing, is that the fundamentals aren't lining up for this in any way, not even on the short term. So I don't think.
Yeah, as Lewis points out, my favourite. I will be leaving it out no matter what anyway. But yeah, the thing with Three Little Indians, and I point them out all the time, but they, like everything else, they need context.
Yeah.
They have to be false breaks. What are these false breaks of? Nothing. No. Maybe it's a false break of a horizontal level, but there's no market structure here the way I look at market structures. So for that to be a false break, it has to break a structure to the upside to start with. The only structure I see for that to be a breakout is, hang on, I'll just use my thing, if it'll actually work. There we are. The only structure I've got here is this. So yes, that's a false break of that, but that's already played out. And for this one to be a false break, what structure am I breaking out of? Nothing, in my opinion. And for this one to be a false break, again, it's got all broken structure. So really, Three Little Indians means three breakouts of a structure. So say we had a structure there, there's one, this might be two, and then we get a third. But at the moment, yes, we've got 1, 2, 3 ascending highs, and I'm not saying that's not going to work. But what I'm saying, my Three Little Indians is not based on that. It's based on a structure being broken 3 times. And if you have a look at Euro Kiwi right now, I'll go back to it again. That's exactly what is happening. It's broken out of this range, it's come back in. It's broken out of this range, it's come back in. And that's what we're waiting for the third one, right? So the structure is this rectangle. Yeah, Lewis, absolutely. It could well be a completely different setup. If you get the double top, then you wait for a second or a lower high, happy days. I think that's perfectly valid. But I wouldn't be calling.
There's lots of divergence as well. There's lots of divergence. The indicators are diverging as well. But some of these indicators are embedded, and it just makes them a lot harder to read when they're embedded. You look at the RSI 14, not you, Jeff, but Wing. If you look at the RSI 14 on the euro, on the dollar yen, it's beyond the 70 mark, which makes it difficult to read all of a sudden. It's not within its normal range. But there is divergence. That we are sort of seeing lower highs on the indicators and higher highs on the on the price action. And it would suggest that actually it's possible that if you look at the weekly charts, that we might be on our second Little Indian, and there might be one more move to the upside.
All things are possible.
Yeah,
including me trading dollar yen again at some stage.
Yeah,
that's not going to happen. Yeah. Not going to happen anytime soon. I can promise you.
Thanks for the question, though, Wing, and appreciate you. Yeah, you hate it. Right. You hate the dollar yen.
I do. Oh, it's a prick of a thing.
Yeah.
Look for 1,000 pips on a lower high. Sounds good, Lewis. And I didn't know you had COVID last week, mate. How you feeling?
Oh, I mean,
Hope
do you know
you're
what? He
okay.
was a bit of a trooper. He was in IFP. He managed to kind of do IFP with COVID, so did amazingly well.
Happy days.
I
That you're
couldn't have
over
done
it, I take it. Yeah.
I couldn't
All
have
right.
done that.
We're
Right,
outta here,
let's
right?
do it, mate. Let's push off. Thank you so much, guys. Really appreciate it. Enjoyed the show. And thanks to Wing as well for getting involved on YouTube. We will see you back on Monday. Don't forget your list next Thursday. We will be back Monday with Simon and George, and of course with each other. Thank you to Marlon, and have a great weekend, guys. Have a great weekend, Jeff. I will see you Monday, mate.
You too, buddy. And thanks for being our trading buddies, everyone. We hope you have a lovely weekend and look forward to your company on Monday. See ya. Bye-bye for now.